Today we are examining a question that continues to attract significant attention among Iraqi Dinar followers. Is the Iraqi Dinar undervalued today, and could there ever be a monetary mechanism that would justify a value of 3 or even 4 US dollars per dinar? That question deserves a careful financial analysis, rather than speculation. The discussion comes from commentary by New Sound guru Sandy Ingram, who argues that the Iraqi dinar may be undervalued, while also questioning whether the currency could realistically be worth 3 or 4 dollars per dinar under today's economic standards. The important point is that these are very different questions. A currency can be considered undervalued in an economic sense without automatically implying that it is about to experience a dramatic revaluation. So, in today's analysis, we are going to separate the economic fundamentals from the speculation, examine Iraq's dependence on oil revenues, discuss the importance of diversification, explain the role of international institutions such as the IMF and World Bank, and finally look at what would actually have to change for the Iraqi dinar to support a substantially stronger international value. Let's begin with the first question. Is the Iraqi dinar undervalued? The answer depends heavily on what we mean by undervalued. In foreign exchange markets, a currency's value is influenced by many factors. These include inflation, interest rates, foreign exchange reserves, trade flows, government policy, economic productivity, investor confidence, capital flows, political stability, and expectations about future economic conditions. Iraq is a particularly interesting case because it possesses enormous natural resources, especially oil. Oil gives Iraq a major source of foreign currency revenue. When global oil prices are favorable and production and exports remain strong, the Iraqi government can generate substantial dollar income. Those dollars are extremely important because Iraq uses foreign currency earnings to support imports, government spending, and broader economic activity. But there is an important distinction between being resource-rich and having a highly diversified, productive economy. That distinction is at the center of this discussion. Iraq has the resources to generate substantial national income, but oil remains the dominant engine of the economy. That creates both strength and vulnerability. The strength is obvious. Iraq has a globally valuable natural resource and significant oil reserves. Oil exports can provide the country with billions of dollars in annual revenue. The vulnerability is that oil prices fluctuate. When oil prices are strong, government revenues can improve substantially. But when oil prices decline, the government's fiscal position can become much more difficult. This is why economic diversification is so important. A diversified economy does not depend on a single commodity for the majority of its external earnings. Instead, it develops multiple sectors capable of generating income, employment, productivity, and foreign exchange. Those sectors can include manufacturing, agriculture, tourism, transportation, logistics, technology, financial services, and other forms of private sector activity. For Iraq, diversification is not simply about creating a stronger currency. It is about creating a stronger economic foundation underneath the currency. And that distinction is critical for anyone following the Iraqi dinar. A currency is not made fundamentally stronger simply because a government announces a higher exchange rate. The underlying economy has to be capable of supporting that exchange rate. This brings us to another important point in the original commentary: the role of the International Monetary Fund and the World Bank. The IMF and World Bank do not simply decide what a country's currency should be worth. That is an important clarification. The exchange rate regime is ultimately a matter of national monetary and economic policy, subject to the country's international obligations and market conditions. The IMF can provide policy advice, economic assessments, technical assistance, and financial programs. The World Bank can support economic development, institutional reforms, infrastructure, and private sector development. But neither institution simply presses a button and assigns a country a currency value. Therefore, when discussing a potential major change in the Iraqi dinar's exchange rate, the more important question is not, did the IMF approve $3? The more useful question is, what economic and monetary conditions would make a much stronger exchange rate sustainable? That is where the analysis becomes much more interesting. Imagine, for example, that Iraq suddenly announced an exchange rate of 3 US dollars for 1 Iraqi dinar. At today's approximate exchange rate scale, that would represent an enormous increase in the international value of the dinar. Such a move would have consequences across the entire economy. Government finances would be affected, bank balance sheets would be affected, seas prices would change, axis competitiveness would change, the purchasing power of Iraqi households would change, businesses with revenues and expenses in different currencies would be affected, and, perhaps most importantly, the credibility of the monetary system would immediately be tested. This is why a very large exchange rate adjustment cannot be evaluated simply by looking at the amount of oil Iraq possesses. We have to look at the entire monetary system. One of the biggest issues is the quantity of Iraqi dinars circulating in the economy. The exchange rate is not simply a number printed on a central bank document. It interacts with the supply of money, demand for money, banking activity, government spending, inflation, and foreign exchange reserves. This is where the concept of monetary credibility becomes extremely important. If a country has a stable monetary system, controlled inflation, strong institutions, reliable banks, and confidence in its currency, people and businesses are more willing to hold and transact in that currency. But if large amounts of money remain outside the formal banking system, if people prefer holding foreign currency, or if confidence in financial institutions is weak, the central bank faces additional challenges. For Iraq, strengthening the banking sector is therefore a major part of the broader economic story. Banking reform may not sound as exciting as the phrase new exchange rate, but economically, it can be much more important. A modern banking system allows businesses to obtain financing. It improves payment systems. It supports international transactions. It creates better channels for savings and investment. It helps bring economic activity into the formal financial system. And it gives monetary policy a stronger transmission mechanism. In other words, if Iraq wants a stronger and more internationally integrated economy, banking reform is a critical component. This also explains why international financial compliance matters. Iraq has been working to improve banking sector transparency, international payment systems, anti-money laundering controls, and compliance standards. These reforms can help Iraqi banks become more connected with international financial institutions. That process is important because a currency operating in a modern global financial system requires trust. International banks, companies, and investors want to know that financial transactions are transparent, regulations are enforceable, and institutions are reliable. That does not mean that the Iraqi dinar needs an exchange rate of $3 or $4 to become internationally credible. In fact, the relationship works in the opposite direction. Institutional credibility helps support currency credibility. This is one of the most important points for dinar followers to understand. A higher exchange rate does not automatically create a stronger economy. A stronger economy can create the conditions under which a currency is capable of maintaining greater value. Now let's return to the $3 or $4 question. Could the Iraqi dinar ever reach such a level? From a purely theoretical perspective, exchange rates can change dramatically over time. But theoretical possibility is not the same thing as a realistic, near-term forecast. There is currently no reliable basis for presenting a $3 or $4 exchange rate as a guaranteed outcome. That distinction is essential. A responsible financial analysis cannot say that Iraq is definitely moving toward $3, $4, or any other specific rate simply because the country has oil wealth. There would need to be a credible monetary framework behind such a change. And there is another issue that is often overlooked: redenomination. Some discussions about $3 per dinar can become confusing because the unit itself matters. Suppose a country removes zeros from its currency. The numerical exchange rate can change dramatically without necessarily creating an equivalent increase in real purchasing power. For example, if 1,000 old units are converted into one new unit, then the number printed on the exchange rate screen changes, but the economic value of the underlying money does not automatically increase by 1,000 times. This is why currency reform must be analyzed carefully. A redenomination is not automatically a revaluation. A revaluation is not automatically a sudden increase in national wealth. And a stronger exchange rate is not automatically the same thing as stronger purchasing power. These concepts are often mixed together in online discussions, but they are economically different. So, what would actually matter for the Iraqi dinar over the long term? First, economic diversification. Iraq needs productive sectors outside oil. that can generate sustainable income. Second, banking reform. A stronger banking system can increase financial participation, improve capital allocation, and make the economy more efficient. Third, international financial integration. Iraqi financial institutions need strong compliance systems and reliable international connections. Fourth, fiscal discipline. The government needs to manage spending in a way that reduces excessive dependence on volatile oil revenue. Fifth, monetary stability. Inflation must remain controlled, and confidence in the dinar must remain strong. Sixth, political and institutional stability. Investors generally prefer environments where rules are predictable, contracts are enforceable, and economic policy is credible. And seventh, stronger private sector growth. If Iraq can increase domestic production and reduce unnecessary dependence on imports, it can improve its trade position and strengthen the productive base of the economy. These developments would matter far more than rumors circulating online about an overnight exchange rate announcement. Now let's consider the short-term implications. For Iraqi dinar followers, the most important short-term message is that economic reform should be watched through measurable indicators rather than exchange rate rumors. Watch the Central Bank of Iraq, watch monetary policy decisions, watch foreign exchange market conditions, watch inflation, watch foreign reserves, watch government fiscal policy, watch banking reforms, watch international financial compliance, watch non-oil economic growth. These indicators can tell us far more about the direction of Iraq's economy than an unverified claim about a future exchange rate. If Iraq continues improving its financial infrastructure and reducing vulnerabilities, that can strengthen the long-term foundation of the dinar. But progress does not necessarily happen overnight. Economic transformation takes time. And this is where expectations need to remain realistic. A country cannot instantly build a diversified economy simply by changing an exchange rate number. Factories need to be built. Businesses need access to credit. Distrafkas needs investment. Workers need skills. Financial institutions need modernization. Government institutions need stronger systems. And investors need confidence. All of these factors take time. Now let's examine the oil issue more closely. Oil revenue provides Iraq with enormous financial potential, but oil income is ultimately connected to global markets. Oil prices can rise, oil prices can fall, production can change, global demand can change, geopolitical conditions can change. That means Iraq's long-term economic strategy cannot simply depend on assuming that oil prices will remain favorable forever. Diversification is therefore a form of economic insurance. If Iraq develops strong agricultural production, manufacturing, logistics, tourism, technology, and private sector services, then the economy becomes less vulnerable to fluctuations in oil revenue. And if those sectors begin generating foreign exchange independently, the country's external financial position could become more resilient. That could eventually contribute to stronger confidence in the Iraqi dinar. But again, there is a major difference between creating conditions for currency strength and guaranteeing a particular exchange rate. No serious analyst should promise the latter. Another important issue is purchasing power. When people hear a number like $3 per dinar, they naturally think about what that would mean for their personal holdings. But exchange rate arithmetic alone does not tell us whether households would actually become proportionally richer. If the currency is redenominated, prices and wages may also be adjusted. If an exchange rate change is implemented under a broader monetary reform, other economic variables can move at the same time. Therefore, investors and viewers should not evaluate a currency reform simply by multiplying their dinar holdings by a headline exchange rate figure. The economic reality is much more complicated. Now, could Iraq potentially move toward a stronger exchange rate in the future? That depends on economic conditions. A sustainable strengthening would require credibility, stability, productivity, and monetary discipline. The stronger the underlying economic fundamentals become, the more options policymakers may have, but the timing and magnitude of any future exchange rate adjustment cannot be reliably predicted from the information in this commentary alone. This is why the statement that the dinar is undervalued should be interpreted carefully. A currency can appear undervalued relative to certain measures of economic fundamentals while still being maintained under a specific exchange rate regime. Policymakers may deliberately choose a particular exchange rate arrangement to support price stability, trade, fiscal planning, and economic predictability. So, A relatively stable exchange rate does not necessarily mean that policymakers are unaware of the currency's potential. It may simply reflect the priorities of monetary policy. For Iraqi dinar followers, this is a much more useful way of looking at the situation. Instead of asking only, when will the dinar suddenly become worth $3? Ask, is Iraq building the economic conditions that could support a stronger and more internationally trusted currency over time? That question produces a much more meaningful analysis. And right now, the story is bigger than the exchange rate. It is about Iraq's transition from an economy heavily dependent on oil toward a more diversified economic model. It is about strengthening banks. It is about improving international financial connections. It is about developing the private sector. It is about maintaining monetary stability. It is about attracting investment. And it is about building confidence in Iraqi financial institutions. If those reforms succeed over the long term, the Iraqi economy could become more resilient and the dinar could benefit from greater underlying confidence. But viewers should be cautious about interpreting every banking reform or international meeting as evidence of an imminent currency revaluation. Not every economic reform leads directly to a new exchange rate. Some reforms are designed simply to make the financial system safer and more efficient, and that is still significant progress. So, what should we take away from Sandy Ingram's question about whether the IQD could be worth $3 or $4? The first takeaway is that Iraq possesses substantial economic resources, particularly oil wealth. The second is that resource wealth alone does not guarantee a highly valued currency. The third is that diversification can reduce Iraq's vulnerability to oil price cycles. The fourth is that banking and institutional reform are essential for deeper integration with the global financial system. The fifth is that the IMF and World Bank can provide guidance and technical support, but they do not simply dictate a $3 or $4 exchange rate. And the sixth, and perhaps most important, is that there is currently no responsible basis for presenting a $3 or $4 IQD exchange rate as a guaranteed or imminent event. For the short term, the most meaningful developments will likely come from monetary policy, banking reforms, government fiscal decisions, oil revenues, inflation trends, and international financial integration. For the long term, the bigger question is whether Iraq can transform its enormous resource wealth into a diversified and productive economy. If Iraq can accomplish that, the economic foundation supporting the dinar could become significantly stronger. But that is a process, not a single event. And that is exactly why viewers should separate economic reform from exchange rate speculation. A stronger Iraq can eventually support a stronger currency. But the path between those 2 points involves years of policy decisions, investment, institutional development, and economic diversification. So, if you are following the Iraqi dinar, keep your attention on the fundamentals. Don't rely on unverified rate claims. Don't assume that a specific exchange rate is guaranteed. And don't confuse a currency reform, redenomination, or banking reform with an automatic increase in personal wealth. Instead, watch the actual economic data and official announcements. The Iraqi dinar story is still developing, and the most important developments may not always be the most sensational ones. The real story is whether Iraq can build a modern, diversified, internationally connected economy capable of supporting sustainable growth and long-term monetary stability. That is the foundation that ultimately matters. And if meaningful changes occur in Iraq's monetary policy, banking sector, fiscal position, or exchange rate framework, those developments will deserve careful analysis based on official information and measurable economic evidence. For now, the question of whether the Iraqi dinar could someday be worth $3 or $4 remains a theoretical scenario rather than a confirmed financial forecast. The responsible approach is to monitor the fundamentals and allow the economic data, not rumors, to tell us where the currency is heading. Thank you for watching Iraqi Dinar News. If you found this analysis useful, make sure to subscribe to the channel, like this video, and turn on notifications so you can stay informed about future developments involving the Iraqi dinar, Iraq's economy, monetary policy, and global currency markets. As always, remember that this content is for informational and educational purposes only and should not be considered financial advice. Currency markets involve risk, and future exchange rates cannot be guaranteed. Stay informed, stay analytical, and most importantly, follow the facts.